Is 10% inflation, is that even possible? Well, I want to address that in today's video because there's a lot of people that are saying not only is 10% inflation possible, some economists say we have current inflation at 10% right now. So I want to bring this to your attention because over the past few days, I've been getting asked from multiple people, is inflation at 10% even possible? The answer is yes. And not only is 10% inflation possible, again, some economists believe that true inflation is over 10% today. But they say the reason we are not seeing it at 10% and it's only sitting at 7.9% is actually pretty simple. Two big things. One, we have multiple changes to the way that the CPI data is even collected. Now, those aren't like recent changes. Those have been changed a little while ago, but there's still changes. So true inflation, right? What we saw, in the 70s, right? Those are things that we expect are over 10% today. Some have been saying this for the past 6 months, is we have over 10% inflation. Second thing is we have lagging costs. Many of these costs are lagging because keep in mind, 7.9% inflation isn't for March. That's our CPI reading for February, but it comes out a month later. Okay, so it's big changes there. Here's the other thing you need to keep in mind. How the CPI data works is, let's say you got used cars. Okay, let's say used cars are, let's say we see it's at 2% in the first 10 days of the month. Then it's another, let's say it's at 8% within the next 10 days. So the 10th through the 11th through the 20th. And let's say it's at 1% for the 21st through the 31st. What you got to keep in mind is the CPI reading is broken up into 3 different sections. And then they take those 3 different sections and then they just take the median. Okay? That's all they do. They average it out. So you see why this is such a big deal is because the CPI reading is already a little bit off. Okay? There's issues with that. Many economists have been saying this for years. So that's the other issue is that our readings are a little bit off. We got lagging costs and indicators, right? So that's something to be aware of. So the real concern right now is inflation at 10% is already here. And again, we're sitting at 7.9% according to the CPI data. But many expect we're over that right now, currently. But what we are hearing is that many economists believe that we will be up over 9% by next month. And this is according to the CPI reading, not to the true inflation. And some say that if we continue to see these issues within the next 2 to 3 months, we will be over 10%. That's scary. But let's talk about why 10% is more than possible. Gas prices are going up, okay? And something that we've been discussing here on this channel for quite some time is gas prices. They continue to go higher and higher. But why is that? It's our supply and demand is a huge issue. We have the same demand right now, but supply didn't go up. It didn't stay the same. It actually went down due to our Russian oil ban, right? We also know that during the winter months, right, really towards November, December, January, February, that's where we're seeing demand in gasoline actually decrease a little bit. So gas prices normally drop, but that's not what we see. We saw that they actually increased. But here's the thing you need to keep in mind with gas prices. And again, gas prices are going to be a huge factor this next month, when we see our CPI reading, is that now people are starting to travel, starting to book their vacations for spring break and for summer. Well, guess what? As people are booking these, gas prices are going to go up. Okay, March, April, May, June, July, August, gas prices are elevated. So we could easily see between March, April, and May, okay, those 3 months, we could easily see gas prices increase between 25 cents and 75 cents a gallon. Yeah, that's what history tells us. So again, just keep that in mind, is there's a huge issue just with gasoline prices. The next thing that could send our CPI reading and inflation up over 10% are rents. And you're probably thinking, well, rents are fairly stable. They don't just increase all of a sudden. True. Here's what you need to keep in mind, though. Rents will increase as landlords or their tenants' leases are up. So guess what? As the lease is up, the landlord decides, I'm going to raise rents because, well, property taxes is going up. I pay utility bills, so I'm going to increase that as well. And so let's say instead of just a quick little $25, $50 raise in their rents, it might be $100 to $200 because of the current costs. Well, guess what? Shelter accounts for a third of the CPI reading. Yeah. Do you see why that's so scary? It accounts for a third. That's heavily weighted. Guess what? As all these rents start to increase, the CPI reading is going to go up. We know food prices are going higher because of supply and demand. We still have the same amount of demand, but our supply is actually decreasing due to gas prices, due to worker shortages, right? Which is something we've seen over the past, year, 2 years? That's what's scary about this. We know manufacturing is slowly increasing, but as far as the manufacturing plants that are opening up, which is great, but here's the problem. Manufacturing as a whole is increasing, but certain industries are actually seeing less supply. Keep this in mind. Materials are costing more money. Let's say something like aluminum or titanium or something's coming from Russia or from Ukraine. Guess what? Well, if they're having issues in their manufacturing plants and their all this stuff is just shut down due to the Russia invasion and pretty much war on Ukraine, guess what? We're not going to see those products here in the U.S. We're not going to see some of those things over in Europe, right? We're not going to see those for quite some time. So that's the other issue is manufacturing could come to a slow. It could really slow down, right? It could almost come to a halt. And that's going to cause other issues. And just keep this in mind that, again, we're just 2.1% away from 10% inflation. We're at 7.9%. Many economists predict that we will not just get to 10% inflation, but the only way back to our normal 2 to 4% inflation is with the Federal Reserve causing a recession. And I know what you're thinking. There's no way the Federal Reserve is going to cause a recession. And I can tell you right now, the Federal Reserve's job is not to worry about a recession. Okay, that's not what they're trying to worry about. Okay, if the Federal Reserve is worried about runaway inflation, they could do exactly what the Federal Reserve Chairman Volcker did years ago, where he pretty much had to cause a recession. And is it what he wants to do? No. Is it what the U.S. economy needs? Some say no. But for the Federal Reserve, they have to prevent runaway inflation. So that's the issue. Is will the Federal Reserve cause a recession? They could, and they would. They don't care about your portfolio. They don't care about the housing market. Okay, if the prices are going up or going down, that's not what they're really worried about. Okay, now, just so you know, after almost every time we see record inflation readings like this high, okay, keep this in mind. Almost soon after, we go into a recession, almost right after. So just be aware of that, because now, not only is it possible that we see 10% inflation, it's also possible that the Federal Reserve will cause a recession. And once we go into recession, things like your stock portfolio will decrease. Your home prices will decrease. People will start to lose jobs, right? And this will be a very difficult time. So just understand, 10% inflation is just one of those dominoes. And as they start to fall, it will get harder and harder for the American people. So just wanted to give you that little warning, but just understand there's a lot still to come. So again, thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.